I'm the Chuck in the Markets Up Chuck. And today's blog was titled Mispriced and Misunderstood because I'm hearing a lot of talk about people worrying about what the market's going to do lately. And the reality of it is, if you own real high-quality individual companies, the market really doesn't matter in the long run, although it does have an impact in the short run. Let's take a look at Cognizant Technology Solutions, for example. Here's a company with no debt on the balance sheet, an incredible growth rate of over 40% a year. You can see the stock price correlated to earnings. Earnings held up very well during the recession, including the expectations for 2009, and yet the stock price fell precipitously, down to under $14 or under $15 a share at $14.38. But it has since recovered up to $29 because the market was simply mispricing this stock. It had overreacted because the company was doing significantly better than the general markets or the economy indicated. MGM Mirage, on the other hand, is a company that was actually massively overpriced in 2008 and was being mispriced then by the market. It did have a very strong collapse in earnings. Actually, is expected to show a loss this year. This company's stock price deserved to fall, and as you can see, there's been very, very little recovery in what the stock price has done relative to what it historically has traded at. On the other hand, if I take a look at Aflac, another really fine company that went through the recession with excellent operating results, very strong balance sheet, extremely well managed, one of the leading best managed insurance companies on the planet, you can see the market stock price fell precipitously, and it really didn't deserve because the earnings held up, and it really never deserved to fall like this. And as you can see here, it has recovered from a low of 11 all the way back up to 31.5. The market is still, in my opinion, mispricing this stock, tremendously. On the other hand, if we take a look at Citigroup, here's a stock that saw its earnings collapse. Here's a case where the stock price deserved to fall, and as you can see, the recovery for Citigroup has been, very, very anemic. So, it's all about the individual stocks you own, not what's going on in the market. Here's Fiserv, a company whose stock price clearly was, always traded above its earnings justified level, had a, real good 2008, and yet the market took its stock price down, and you can see it's recovered almost, back to where it originally started from in 2008, just simply based on the fact that the market was mispricing it. When you look at the track record of this company, it's significantly better than the market over its 20 years. It has almost an 18% return versus the S&P's, 5. And then finally, Cerner, which is involved in medical technology, information technology. This stock fell precipitously during the market. Earnings were spectacular, and of course the stock price has now recovered dramatically. So it's not about the stock market in general. This is the theme that I really try to get across to people and over again. It's really about what you own, not what the general market's going to do. And people who are worried about the market are making mistakes today because many of these stocks have obviously dramatically outperformed the market even this year, let alone over a long history. It really comes down to what you own, not what the general market's doing. Think, specifically about what you own and not about the general market. That's always been my advice. This is Chuck Carmel saying thanks for listening, and talk to you again tomorrow.